M and W formations. How's everybody doing? Today we're going to be discussing some of the different characteristics of the M and W, but not exactly the concept of them. So we've already went over in other videos how to trade M and W formations. So if you have not checked out those videos, please go ahead and check those out first so you have a better understanding of what we're talking about in this video. Some of the things we're going to be discussing today are the wedge breakout second leg, the signature trade, wedge formation at the high, and the micro M at macro second leg macro M. So let's start off with the micro M at macro M leg macro. That's a mouthful. Micro M at macro second leg macro M. Okay. So micro and macro. If you don't understand that concept either, I suggest you go back into our videos as well and check out some of the videos we have on micro and macrocosm in the market. Also, signature trade, we have a video on that as well. So we have a lot of videos. You guys feel free to check them all out. Okay, there's nobody stopping you. So first of all, we have the high created here on the GBP US dollar. This is the high of the week, right here. It's also the high of the previous week. It stop hunted the high of the previous week. Anyway, what we see is this big fat M, right? We have a micro M here, but that micro M is just one leg of a macro M, correct? So these are the things that I'm looking for, you guys. Now, once you start to look for the same things that I look for, it'll become a lot easier, right? At least that's the theory. That's why I'm doing these videos. Feel free to just throw away those indicators because you don't see me using any, and I'm doing perfectly fine. I don't have to explain indicators to understand how the price works. You don't need it, you guys. No need for indicators. So we had the macro M, as I was saying. Macro M, second leg macro M. What am I talking about when I say micro M at second leg macro M? Well, here's the first leg of the macro M. And then here's the second leg of the macro M. But that second leg of the macro, inside of it is a micro M, right? And inside of that micro M, inside of all of this micro macro madness, is what we have as our signature trade right here. This right here is our signature trade. Played out perfect. Now, let me delete some of this stuff. What is our signature trade for those that may not know about it? It's so simple. It's basically a wedge formation. The second leg of the wedge formation, the first leg, the breakout of this wedge creates the first leg of the M. So here's the first leg, and then the second leg of the M you can see was that stop hunt above the high and then dropped. But why did it stop hunt so high? Like that's pretty crazy. I mean, if we were trading this micro M formation, most likely our stop loss would have been up here somewhere and it would have been hit. But if we look at the bigger picture, this stop hunt was stop hunting the first leg of the macro M. You understand that? So there's stop losses up here that need to be hit. Stop losses of any sellers selling in this area or holding their sells. So what needs to happen is that second leg needs to stop hunt the first leg. Now this doesn't necessarily need to happen. Doesn't happen all the time. You can see here it just stop hunted about half a pip, maybe 1 pip above the second leg, or excuse me, the first leg. Second leg stop hunted about a pip above the first leg. But I imagine the spread was manipulated a bit as well to hit any orders, so probably about 3 to 5 pips above that high. But anyway, this was the macro M inside the micro M inside what we had our signature trade inside a wedge formation at the high. Alright, so yes, there's another pattern in here as well that we're going to start discussing, and that I have never mentioned in any of my previous videos. So, pay attention. This is what made me make this video today, just out of spontaneous craziness, I guess. Alright, here is the wedge formation that happened it basically at the high. I mean, it's at 1.36. The high of the week is 1.3617, so about 15, 17 pips away. Anyway, very extremely close to the high. And the stop hunt for the second leg, the stop hunt of the first leg of the macro M. Whoa. What? Okay. What? The stop hunt for the first leg was induced by a breakout of this wedge. So you can see this wedge here, and then it was like a big spring being lifted off or being let loose. And that springing action actually caused it to reverse it had about a 200 pip range. It reversed from the high 163 pips. And that's exactly why they hit the stops up here and dropped. Because they had to hit these stops of any sellers so that they could drop it and make a profit, so that you weren't riding their wave. If that makes any sense. It should if you've been watching our videos. So, wedge breakout second leg. This was the wedge breakout second leg. Wedge formation at the high. This was also a wedge formation at the high, or very, very close to the high. But does this only work on GBP USD? Sadly, yeah, no. This works on every pair and on every time frame, you guys. Okay, GBP JPY, let's look at it. Here we have the high at 151.5. What do we see here? Wedge formation, second leg, breakout. Very, very volatile, fierce breakout of this second leg. This was a 83 pip stop hunt. Well, actually an 83 pip spike to the high and then a continuation. So what I want to make clear, you guys, is when trading M and W formations, always go with the trend. Until you understand how a trend works, don't go against the trend, or you'll get burnt. It's as easy as that. Now, this wedge formation here, this wedge breakout that I have been teaching just now, this, for example here, this can also be used to go with the trend, even though it is an M setup. Let's take this into consideration. Here's an M. Here's an M. Here's an M. You think they're going to make another M for people to sell? You think they're going to give you that? It's like giving away free money, you guys. They're not going to. If they would have wanted to drop the price to at least 150 or drop the price at all, they would have done it here or here. They're never going to give you this much time to keep selling and buying in a range like this, you guys. Especially not on the 15-minute chart. So, use common sense, okay? We can see GBP, JPY obviously has been in a massive uptrend. Go with the trend, okay? We can see, we wouldn't want, obviously, we're not going to buy right here, right? We're not going to buy anywhere in here. Why? Because there's this massive uptrend, and in one day, it shot up 430 pips, just about, in one day. In that one day, there was almost a 500 pip range on that one pair, GBP, JPY. They're not going to go any higher, you guys. This was the ceiling, and you can see that. The ceiling was created the same day that they shot up 500 pips. They're not going to go past this until they accumulate more money, more liquidity, and then they can move up. Does that make sense? So, you could have sold, by all means, right here, at the ceiling here. Could have sold here again. The fourth time, that's getting a little risky. Could have sold that. Could have sold right there. That's getting a little risky though. And then we can see the 5th time we had that wedge formation, and I mean, they were just giving us free money here. It was obvious that it wasn't going to continue downwards, just because number one, we have this wedge formation. We can see these wicks here, very large, very nice wicks, all stop hunting the low and then respecting that low. They weren't going to go past 150.5 anymore. They were going to break high. So respect that wedge formation at the high. So understand that if the wedge is at the high and it's going with the trend, take the wedge breakout. Take the breakout of the wedge. I normally do not advise you guys to take the breakout of the wedge, but that's for the signature trade, right? We have our signature trade here. The breakout happens, and that's when retail traders buy. Retail traders buy that breakout. What happens again? That second leg M forms. That's when we sell. We sell the second leg M. That's what our signature trade is considered. Go back into our signature trade video if you'd like to learn more about that. GBP AUD. We have 1.7 as our ceiling here. This was created on Sunday, Monday area. The high right there. And then what do we have here? One little guy here. One lonely little wedge all alone. I actually sold this. Foolish me. I sold this thinking it was an M, and thinking this was the smaller micro M, and that's what actually made me do this video, because after selling that, I saw this wedge, and I stopped myself out here with about a 8 pip loss. But I saw this wedge and I noticed it. And I noticed what happened when a wedge is at the high instead of being, for example, down here, and then the wedge formation. For example, if the wedge was down here and then the breakout happened like this, that's a sell. But the wedge is at our high. What do we think is going to happen? We can expect a stop hunt or a breakout of this wedge to stop hunt the high here. And that's exactly what happened. We can see a 35 pip spike to the upside, and then that continuation. So if you would have bought with the trend, going with the trend, would have bought this wedge formation breakout here, that's a 125 pip continuation in about 8-9 hours. And like I said, you guys, this happens every pair, every time frame. It also happens with the W formations. Just think of this inversely. Everything that I'm saying, just think of it inverse. I'm trying to find a little wedge here so I can show you a W. Anyway, this is kind of a W. Wedge, breakout, second leg. Anyway, you'll see it. You'll see it. It'll be obvious when you guys see it, especially when it's in the when you're looking up close like this, and in, for example, I don't know, here. We'll check a different pair. Here's a somewhat alright example of the high being formed, and then the breakout of this wedge is a continuation of the uptrend. But anyway, I didn't want to make this video too long for you guys, so I'm going to tune out right now. Hopefully you guys enjoyed, learned something. If you learned something, feel free to join our community, Forex community.online. You can actually type that in to your browser right up here and click enter, and you will be redirected to our chat room of over 1,000, 2,000 actually, a few thousand people, a few thousand members that are actively trading Forex markets with our methods 24/7. Well, 24/5 is as long as the market's open. So, thank you guys for tuning in. If you learned anything new, feel free to give it a like, thumbs up, subscribe. Peace out.